Hi everybody, this is Todd with the daily video. Hope you're having a fantastic day. Hope your week went well. This week was a pretty good week in trading. We did have some good moves. We had some slow moves, but as you've looked at trading, hopefully you've found some opportunities during this last week to take some trades. One of the most important concepts in trading is the ability to look at the market and be able to identify when the market is getting ready to do something, meaning whether it's ready to go up, down, or maybe just stay sideways. And so as traders, learning how to trade what you see happening on the chart is more important than what you think is going to happen or what you hear people talking about is going to happen, or what you just simply feel is going to be the next thing happening. And unfortunately, especially with new traders, we spend a lot of time dealing with trying to trade on what we think is going to happen. And so I want to focus in on what we need to do in identifying the actual trends and support and resistance and what we actually see happening on the chart itself. Now, that might sound like a easy concept or a simple concept. The problem is that for most people, they end up not being able to follow that, and they end up trading what they think is going to happen and avoid and even ignore what is actually going on with the charts. And as you know, with the simple trading method, we're really looking for opportunities that are going to give us the highest probability of being successful. So anyway, understanding what is going on with the charts is important. So let's take a look here. And this is just a chart that could be anything that we're trading. But the simple trading method should be simple, first of all. Simple to identify those trading opportunities to enter into a trade. Now, the importance of a method is that we have something that we can really take and apply to the charts that will tell us when to get in and when to get out of the trade. So it's not just going in and buying whenever or selling whenever. It's actually focusing in and following a specific set of criteria necessary to enter in and exit those trades. The first thing that we look at is the trend. And this is going to tell us whether we go long or short. Now, in this example, it's pretty clear, I think, that the trend here is moving up. And we can identify this by looking at the price. So looking at higher highs, higher lows. We can look at it by looking at a moving average. We can look at it various ways. But in the end, what we're really trying to identify is the momentum that is happening on the chart. So again, if it's going up, we're buying. If it's going down, we're selling. Then we need to identify support and resistance. And that's because what we're trying to look for are times where the price has taken a little bit of a breather or relaxed a little bit and pulled back to this area of support. Now, the concept is that if we've truly identified something that's in an uptrend, when it pulls back, that is the area or the time that we want to start to look for possible entries. The third thing that we want to look for is the price. We'll call it action. Meaning we just don't want to buy it in an uptrend when it pulls back to support, but we want to wait to see the price move back in the direction of that trend. In this case, with an uptrend, we're going to use the highest high of the last 3 in order to actually enter into that position. So again, fairly simple way to trade based off of a specific method that we're looking for that criteria to occur in order to take that trade. And regardless of what we trade, we need to take that into consideration, be able to identify that. Now, this weekend we do have, the IMF meetings happening, and so we could see some volatility come Monday if some things come out of that we need to be that we maybe weren't thinking about, and so it can cause some volatility, especially if it was a big surprise. Once we have all of this down, because of things like the news, the economic reports, the fourth thing that we really should focus in on is, I'll abbreviate here, our money management, which includes things like our position size, our stop losses, how to calculate that. So you've got to make sure that you're taking proper risk in your trades. And if you can do that and really create this and look at this as a method of trading success, in the end you'll be much better off because you followed these simple rules in order to enter into the trade. So make sure that you have taken some time to review these. Make sure that you've got your rules written out. You can just copy the rules for the simple trading method, but have them down so that as you take trades, you can check off the list that you've looked at everything and you are prepared to trade. So with that, we'll wrap it up. Have a great weekend, everybody. We'll be back on Monday to see how the markets open up, and we'll see if we can find any good examples of what we're talking about here. So until then, take care, and we'll talk to you soon.